Monday officially. Good morning. Happy Monday. Welcome to the Options Income Launchpad Monday Market Kickoff. My name is Scott. I will be your host. Got a fresh cup of coffee here. Okay, let's get cracking. As always, housekeeping matters. We need to keep the lawyers happy. Remind you what we do is for education, illustrative purposes only. Nothing intended to be a recommendation to buy or sell any security or product. We're not brokers or advisors, so we don't give advice. Decisions made should be at your own risk. Okay, what are we going to talk about? Let's talk about the opening futures and the news, and it's great now that we're going to be expecting more news. The government will be releasing news. I don't know what the schedule is going to be, but we know there's going to be quite a bit of delay as we start getting some reports coming in. Okay. All right. Opening futures and news, economic calendar and posture, mindset for trades, opening range. We have a good watch list for this week. A lot of things showing the potential for setups as long as we see some stability and some bounce. I think we're going to be just fine. So, all right. Let's see. Let's start here. Oh, is this right? Looks like we just turned south. I was going to say I looked at them earlier this morning. And looked like that they were okay, but we've taken a little negative dip. Little bit of a negative dip. So we were positive overnight, but now we're minus 0.27 on the S&P, minus 0.19 on the Dow, minus 0.28 on the NASDAQ, and minus 0.36 on the Russell. We're seeing a bit of a rally of Meta or Alphabet. Sorry, Google, I mean. Meta is Facebook. Google is Alphabet. They just are confusing with their names. Good morning, Don. Good to see you. What else? NVIDIA reporting soon. Bitcoin had a big drop. What else? That's really about it. Let's take a quick peek at the economic calendar to see what we're going to actually have. Okay. What do we have this week? Empire State Manufacturing Survey came back. Now, this is a very volatile number. You can see it's not having much of an impact on the market at all. Previous was 10. Forecast was for it to drop to 5.5. Came back at 18.7. It's wildly volatile. We've got some Fed speak coming out today. What's the problem with the Fed speak right now? The problem with the Fed speak right now is that it is increasingly pointing towards reluctance for another cut. Let's just take a quick peek at that. And you can really trace the shift right here. We were at 93% chance a month ago, 62% chance a week ago, 44% chance on Friday. Now we're at 42. So now we're 42 in favor, 57 against. So we're almost 1.5 to 1 against it now. So, yeah. There you go. Okay. And it's funny because I have put myself kind of in the middle. But I find that I'm moving this way and I'm probably over here now. Yeah, that's me. I've moved. I've shifted more into I don't think they're going to do it. Okay. David Wilson says no. I'm pretty sure Stephen D says no. What does anyone think yes still? Does anyone think they're going to? No, for Vladimir, I'm having an issue with the Fed. They opted for a rate cut due to the economy slowing. I don't know. I don't think it was the economy slowing. I think it was labor. Right? The labor market was showing concern. Yeah, I mean, remember their two core functions are labor and inflation. And so do they want to or do they have to? If inflation drops, they want to. If unemployment rises, they have to, and that's where they sort of felt they had to, but I don't think we're seeing that as much now. But yeah, Bob Core said it right. We don't have the data. That's probably the biggest problem is we don't have the data for it, right? Did they have the data for the last one? I think they did. I think they were going off of, the adjustments. There was that big adjustment in August. So, yeah, I would say so. But now I think we're just going to be kind of watching and waiting here. All right. What else are we looking for here? Speaking of the calendar, it's still unknown if we're going to get some of this October data. They're looking to play catch up. So you can see on Thursday we're going to get September's employment data. How many new jobs? What's our unemployment? What happened to wages? That's going to come out. We will still get jobless claims. That'll come out. So the Bureau of Labor Statistics are going to be putting information out. We won't get leading indicators, it looks like. Still getting Fed speak. Our guy, Austin Goolsby, speaking this week. Friday, more Fed speak, and that's it. Then next week, we're going to get a consumer confidence number. And then we have a bunch of data that is unknown. Are we going to get GDP? Are we going to get income and spending? Are we going to get PCE? And then we have Thanksgiving. And then the day after Thanksgiving is usually a light day. So it's going to be interesting, I think, overall. It's definitely going to be interesting. Let's go take a peek at things as we get started here. So a pause here. We dropped. We looked to hold this support level. And a pause now. For those of you who were here yesterday, you know what we did. For those of you who weren't, didn't have a chance to look at the email, my posture dropped 1.25 this last week, which is interesting because ChatGPT dropped last week by 1 point and stayed the same this week. But it brought us closer to the same area. 3.5 for me, 3 for ChatGPT. I saw my long term has stayed the same. I've got a very specific set of criteria for what I'm going to use to either raise or drop that number, and neither one has been hit yet. Probably will be another week or so before it does. Very interesting. Steven said he's right in the middle, 3.25. Where's everybody else at? Who thinks they have the highest score? Who thinks they have the lowest score? Those are my two questions. Do you think you have the highest? Do you think you have the lowest? High, David. How high? Where are you at? 4. Oh, that's we're right in the same area. Right in the same area. Four for Sandy. Okay. And who's the least bullish? I'll be bullish until I'm not. I'd rather be bullish. You know, that's my thought process. I'd rather be bullish. Okay. All right, let's go back and see. So now, what do we have? Dropped a quarter here. Volume stayed flat at 0. And the model actually raised its volume, believe it or not. Dropped major market, raised sector rotation, dropped volatility. So pretty similar. I think I'm sideways, Bill says. Love it. All right. So that's what we have going on. Markets turning around, trying to go positive. Let's go through the indices real fast. Here's the Dow, slightly positive. Here is the Russell, ever so slightly negative still. The NASDAQ is trying to turn pretty quickly, actually. That's probably the best looking one. Up 0.25%. The SPY is now gone positive as well. So, okay, it's fighting. It's fighting, trying. I agree, Stephen. We'd love to see the Russell show some signs. Apple is on a pause here. It's on a hiccup, holding support. We'd love to see Apple participating in this thing. AMKR possibly setting up. Amazon trying to hold some support. APH looks like it could be getting close. All of these, you can see the stochastics trying to bottom, trying to find some support levels here. ASX, trying. AVGO. Let's take a look at AXP. I think it looks close, as does Bank of America. I think some of the financials are starting to show up. As a group, I would say that, the overall group is not great. But those that are leading look quite strong. Bank of America. Here is Bloom Energy. Citigroup is sideways. Caterpillar maybe trying. CIN, Sienna Corp, looks pretty good. So here's the question. If, as we've seen things drop, have you dropped your risk levels? So that's the first question. Have you dropped your risk levels? And then second, to what? How many trades are you willing to carry or be in now? Those are a couple of the questions that I have. All right, let's keep going here. Zilts until I find a goodie. Got it. Okay. CLS is trying to recover. Coherent, getting close, trying. I think somebody put in a preemptive trade on this one here. Okay, let's keep going. CRDO. A lot of this is going on where, oh, look at Cisco just keeps on pushing higher. Okay, let's look at Delta. Kevin, how's that working? I love it. I love it. Here's the Dow trying to set up. Ford went up, had a little bit of a hiccup. Looks like it could try to go again. Fox, this is relatively new to us from Communication Services. I think that looks quite strong. Quite strong. First Solar, another one that's kind of setting up for a trade here. Fiber pulling back, but looking close. Today's an interesting day. Gold is kind of on a little bit. So I'll tell you this about precious metals for me in gold. We had that consolidation and it busted out. Okay, let's keep going. On that pullback, I think it could give us something. Okay, let's keep going here. My screen's frozen. Let's see. Are you seeing gold? Should be seeing gold now. General Motors. Ah, okay. Perfect. Perfect. Maybe just a lag. Let's go Google. Well, yeah, we were looking for Google, but not at a 6% jump overnight. That doesn't really give us much opportunity, so we're gonna have to keep watching that one. Goldman looks very close. I think we see strength in AXP. I think we see it in Bank of America. I think we see it in Goldman Sachs. GTX looks close. Howmet. Here's what I'll say. I think we have plenty of good-looking stocks. We have a good number of stocks that look close, that look like they're set up. However, we want to make sure we see the right signals here. And we all know it's a long day. It can be bullish in the morning, and then it can revert in the afternoon, and then all the signals that we thought we had are falling apart. And so let's be patient, especially knowing that our posture is where it is. IBM still moving into a setup position. Intel trying to hold the 50. Small caps fighting, but still just a titch underwater. JCI. Looks good. Looks close. We just made a new high. Now it's pulling back. Lumentum. Man, I'll tell you what. That stock is it's a mover. Lam Research looks close. Just had a new high. Pulled back. Held. Trying to turn. Yeah. I would say we're 50-50 that there could be an alert today. Macy's looks good, but needs to turn. MasterCard does not look good. Meta does not look good. Morgan Stanley does. I would say that Morgan Stanley looks like the other financials, at least a day or so away. Microsoft. No. Micron, David Wilson said, looks, I mean, here's the hard thing about it. It's a freight train. Consolidation turned, but by the time it turned, it's already back. Look how close it is to that line already. So the problem with this one is it's like, you know, that would have been a good signal there because it went up and then sort of paused and then kept going. I don't know. I mean, yes, it's bullish. Yes, it's turning. Everything about that looks good, except how well can we define the trade with a stop, a target, a reward to risk? And that's the core issue for us. Netflix is a definite no. Oh, did we split adjust? We sure did. It's back to $100 stock. Now people will love it. I love it. I love it at 100. Same stock, same value. Yeah, same stock, same value. NVIDIA. Earnings coming out on Wednesday after market. NXT. Oh, it's fighting to hold the 50. You can see it tested it, opened below it, held it. I think this one could actually. You know, something like this would be the final. I'd like to see it get above at least there, if not even there. Actually, it's 10%. It was a 10-to-1 split. So it went from an $1,100 stock to a $110 stock. So if you had 10 shares that were worth $11,000, now you have 100 shares that are worth $11,000. Yeah, you have 10 times whatever you used to have at 1/10 the value. Your equity stays the same, right? What you own as a value stays the same. It's very psychological where they're like, oh, people are more likely to buy it. And it's true, actually. It's true. People who are like, oh, I wouldn't touch Netflix. It's $1,000. Now they'll look at it, a month or two later. They're like, what? Look at that. It's a great value. Let's buy it. And you're like, you're buying exactly what you passed on before, but okay. 10 dimes still make $1. PDD earnings. So, it's setting up, but it's got earnings tomorrow. Before market. Palantir, struggling now. QQQ, still holding on, looking all right. The Real. I think the Real is looking close. It is a cheap stock, $14. It does have options. The options are still, they've come down from after the earnings, but still 74% implied volatility. That'll be interesting to look at. Roku. Roku's a little more iffy. Ross Stores. Looks pretty good for a setup, only you're got earnings on Thursday. So you don't have a lot of time there. RTX kind of turned sideways on us. SLV, silver. Interestingly, silver got almost back to its old high. Now it looks like it's trying to work on a cup and handle. SNDK, oh man, I thought this thing was going to pull back, and you can see almost 9% today. What is going on with SanDisk? People who own SanDisk have been crushing it. You don't hear many people talk about this, but this thing was in August, it was sitting at 44. And now it's 277. What a story. Snowflake. Bouncing off the 50, but a little bit paused today. SoFi looks all right, but I feel like the others are stronger. I feel like I would rather trade. I would say the four financials that I'm looking strongest at are some definitely leaders in the group. But it would be AXP, it would be BAC, it would be Goldman Sachs, it would be Morgan Stanley. Sold SoFi at the top, strong resistance. Yeah, 32 and change-ish. I agree. You can see we got it there, pulling back. Love it. Love the identification of resistance. Well done. SanDisk. This increase is attributed to a combination of structural demand benefits, a corporate revival, strengthened fundamentals that have transformed the previously struggling flash memory sector into one of the year's most sought-after investments. Yeah, I remember, way back. I mean, this is 20 years ago when I was doing a lot of traveling and live presentations. And I'd always have my little SanDisk jump drives. We'd call them, what's your jump drive? Flash drive, right? And I'd have all my presentations on it so I could just go up to a computer, pop it in, and boom, I'm off and presenting. I think I still have a couple of them in my desk where I'm I wonder if there's anything on here that's worth looking through. Maybe that's something I'll do while I'm laid up. 48 hours from now, I will be laying on an operating table preparing for surgery to begin around 8:30 a.m. Mountain Time. So it's looming. I'm getting a little nervous as it gets closer. I'm not gonna lie. Okay. Dot still has some too. Yeah, right? You're I wonder what's on these things. STX. Ooh, STX. Seagate Technology. Is that in the same vein then? Are these guys also? Now I want to know what these guys do. Analyze fundamentals. Seagate Technology. Yes, they engage in the provision of data storage technology and infrastructure solutions in Singapore, the United States, and the Netherlands. They offer mass capacity storage, including hard disk drives, HDDs, solid state drives, video and image HDDs, network attached storage drives. Okay. So, hard 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 storage is definitely doing well. Thank you, Stephen. I very much appreciate that. Teradyne. I'm super curious if they're in the same. Nope. Teradyne is automated test systems and robotics. Semiconductor test, robotics, blah, blah, blah. Okay. Well, everybody loves robotics. Oh, they also have memory devices. Magnum platform that tests memory devices. Okay. All in that same vein. Teradyne looks pretty good here for a setup. I would actually, if you look, you've got the cross down here on stochastics. You've got this turn happening here. That may be a candidate for today. Sandy's like, don't come back unless you're 100%. I'm not even 100% now, Sandy. I'm at best 88% at any given time. So, I don't know if I have 100% anymore. TJX. 88 is the new 100. Amen to that. Mainly testers used in they worked with them at Motorola for years. Okay. Well, I like the way they setting up. TJX. I like the way this little bull flag is looking. The only problem is you're on the precipice of earnings. So be careful. We have our last wave of earnings this week. And then we're kind of done with earnings season for another couple months. Tesla trying to fight back to the 50. TSM fighting to hold the 50. Uber fighting to hold that support level at 92. How's the VIX look today? The VIX is... Yeah, I'd like to see it back below 20 by the end of the day, if possible. That shows that it's not elevating. But if this rolls over without... I mean, it's already the same high. Slightly technically, you can see like we were at 22.71 and now this one got to 23. I'm okay with that. I'm not going to be like, whoa, it's... And you can see here... It never closed above 20. And here, it hasn't closed above 20 either, except if it does today. So here it closed at 20. At 20 exactly. Here it closed at 1983. We'd like to see this roll over. We definitely don't want to see this happening. That... If this pulls back and turns, and yeah, we're really a little bit leery of this. That is concerning if we start to see that escalation continue. Wayfair, close. Looking strong, good trend. Yeah, looking real nice. WBD looks okay. Yeah, you can see it pulled back and turned. Yeah, that's a maybe. I mean, the last time it went $5. Once it turned, it just kind of moseyed on up. Western Digital. There's more of those stores of data. Data storage and solutions based on hard drive technology. They are showing that same upswing that all the rest are. Walmart, kind of flat. Let's take a look at the XLs. Materials had a pretty fast bottom, kind of a V-shaped bottom, so that could be coming back. Communication services still struggling under the 50. Energy looking strong. We don't love that. Financials trying, had a bust to the upside, pulling back. If we can get that higher low, that would be very nice for our overall sector rotation scoring. Industrials trying to hold. Technology trying to hold the 50. Staples is still down. Utilities is kind of flat. Healthcare is one of our stronger. Has anyone taken advantage and traded any healthcare as a result of what we've seen in this grouping? Let me know. And of course, consumer discretionary. Yeah, nothing's. It's not. We've seen a shift. We would love. One of the things we saw, especially in regards for tech, if you come back into hold your ground, Wall Street sees tech sell-off as a blip. So there's still a number of people saying that the case for bullishness remains intact, that we're looking to buy the dip. I always tell people I'm going to write a book one day about trading. The title's going to be Find a Bull Market, Buy the Dip. Chapter 1, Find a Bull Market. Chapter 2, Buy the Dip. The end. Fastest, best trading book you'll ever read. I sort of spoiled it a little bit there, but keep an eye out on your Amazon search for that book to come out. It's going to be a bestseller. Lee, thank you. Thank you. The foreword will be longer than the book itself. Okay. However, that is definitely the objective. That is the crux of our philosophy for our watch list. Find bullish looking stocks to put on your watch list. Wait for them to include some charts. Sandy says it'll put me to sleep. Probably would, actually. All right. What else? We are on the last leg of the first half of this week's loop, or this final trading plan loop of the year. How are you feeling about risk management? Do you feel like you have your portfolio heat under control? My heat has dropped from when we were a 5.5 to now a 3.5. My portfolio heat has ebbed. I hope it turns back into a flow, but it's ebbed. And you can kind of see, this is a sample. The maximum portfolio might be 12, and when conditions are harder to read, it might drop to 4 or 5. When volatility is settled and trends start redeveloping, it might go back to 7 or 8. Well, we never really got to this. So I would say I'm more along here. Not necessarily 7 or 8 to 12, but around that, like 2/3. Define portfolio heat. Portfolio heat is your maximum portfolio level risk. How much heat does this? So basically it's a accumulation of all the trade risk put together. So you could call it portfolio risk, theoretically. I like portfolio heat. That's how I learned it. I asked about the document. I saw that. Don, 120 pages. Now that is a book. I mean, look, if you've got it defined and helpful and whatever else, especially if it's like a Word document, because these days, 5 years ago, I might say you might want it to be a little tighter, but these days it's so easy to get help from ChatGPT or another AI model where you can be like, hey, take a look at this document. And let's. I mean, you can get help perusing your documents and finding, ways to improve it. What does 12% mean? That means if I have a $100,000 account, at any given time, if you were to take the positions that I have and you said, what if all of them stopped out all at once? I wouldn't lose more than $12,000. So, right? So that's what it's saying is if I have, 12 trades, if I have 8 trades, each with 1.5% risk per trade, and all of a sudden something catastrophic happened and everything stopped out at once, it's unlikely to happen. It's never happened, but that's the theory behind what it is. Grammarly can help as well. Yeah, there you go. Funny thing about Grammarly is AI. It's an artificial intelligence tool that, everyone's like AI has existed for years and years, is obviously, it's just gotten better at such an exponential rate. So Lee says his portfolio heats dropped from 12 to 7. That makes a lot of sense. Yeah. And then trade risk is like, what is each individual trade? So, if you're 1.5%, then you might have 5 trades on, and that puts you around 7.5. Heat will be reevaluated every 100 trades. So when people are like, hey, what do I do when I hit the end of a spreadsheet? You reassess your portfolio heat based on the final batch of those numbers. And you say, hey, can I step it up because things have gotten better, or do I need to relax, or what do I need to do with it? So we're defining portfolio heat. We're defining trade risk. And for the trifecta, we then also, what is a good number for Kelly? I mean, look, anything positive is good. I'm shooting for 20%. 20% or higher. That'd be fantastic. 20 to 50 is a great place to be if you're in that range. I mean, obviously, the more the better, but I'd like to see 20%. If you have a system that's right 40% of the time and has 2-to-1 reward to risk ratio, your Kelly, no, I'm sorry. I have that backwards. I was thinking expectancy. You were asking expectancy. Kelly, I would say, yeah, we'd like to see it at 10 to 12 or better, if possible. Because the higher the Kelly, the stronger the ability to take risk. Here's an interesting thing, though. Somebody who has a system with a lower expectancy but a higher win rate will have a higher Kelly. If I have an expectancy of 20% and I'm right 40% of the time, and Sandy has an expectancy of 20% and she's right 60% of the time, she's going to be able to take substantially more risk than I am. And so, all things being equal, if we have the same expectancy, the higher the Kelly, the better. And if you have, in that vein, what's going to actually make Kelly higher is a higher incidence of accuracy. Number of trades. Now, some people start there. They're like, is 185 a good expectancy? Yes. It's a phenomenal expectancy. Phenomenal. 185%. What's your Kelly with that? Yeah, that's phenomenal. Great third quarter, 51% expectancy. Kelly of 64. Love it. I love these numbers, you guys. 41.29. Jeez. Sandy's crushing it. We're actually going to wait for Sandy's new book to come out. It's called Find a Bull Market, Buy the Dip by Sandy Hayes. Some people I work with are like, I don't feel comfortable with more than 4 or 5 trades on. So if they only have 4 or 5 trades on, but their expectancy is 15%, they're going to take 3% risk per trade. Versus other people who say, I don't want to take more than 1.5%. And then they work their way from portfolio heat to figure out how many trades should they have. There's no right numbers. Everybody's working to find their own distinct, comfortable numbers. In addition to this, we want to know how we're going to adjust, how we're going to correlate to market posture. What are the tsunami indicators that help us know when to hedge? Of course, you guys know mine is a higher low on the VIX. I also watch for defensive rotation and major market analysis. I also watch for defensive shift and sector rotation. And the last thing of our risk management, when to take a break. When do you stop? When do you say, oh gosh, I've got to dial back a little bit here, relax a little bit. That's important to define. Very important to define. So make sure that you define that if possible. Okay. Yeah, that turned into a great trading plan discussion. I'm glad. Who started that? David Wilson. David Wilson, thank you for pushing us to have a bigger conversation on what we're doing with our risk management. And hey, this is the if you know college football and you know about Notre Dame, they have a sign that says "Play like a champion today," and they all walk out and hit that sign as they leave the locker room. And I tell people I want to have a coffee cup that says "Trade like a champion today," so that I look at that and I know what is it I'm trying to do. Well, my number one job as a trader is to define, manage, and control risk. The better I can do at that, the better I'll be as a trader. And so this is definitely a good one to kind of focus on and really say, here's how I'm going to control it. And then I'll make adjustments if I need to. If I say, oh, I controlled it too much, great. Expand a little. And if you expand a little, then you're like, ooh, that was a little too much. You know, we're weaving our way straight. Okay, good session today. We have one more tomorrow morning. Then we have our Q&A tomorrow night, and then I'm going to check out for a few days. And when I come back, and I'll have bionic parts in me, titanium. There'll be some titanium in my spine. And again, I tell people, you know, I'm not saying I'm going to come out of surgery a superhero or anything, but maybe. It's not guaranteed, but maybe. I'll have titanium parts in me, so who knows? Let's see what happens. Thanks, guys. It's good to see you. Have a great rest of your day. See you tomorrow. Happy trading.